Okay. Ngicela uvala emnyango ne. Ngicela uvala emnyango ne. Hey, what's up, guys? Welcome to another stream. We're gonna get started just now. Here's today we're just gonna do some basics, guys. Nothing too hectic. We're an hour late. I'm not an hour late, but we're like 23 minutes late. You know. So yeah, I just wanted to just set up everything on my WhatsApp on my live stream. All right. So hold on, guys. There's something that I'm still doing. Do you want your? God damn. Let's go. You ain't got no. Okay, how do you unfollow these people? Unfollow. Okay, unfollow. Okay, back. All right, guys. Let me just see who's on the stream right now. Let's see how many people are on here. Welcome to the stream, guys. Welcome to the stream. Let's just let people connect. The ones who want to connect. Let's just give them like a minute. Let's just stay. Let's just be on standby for a minute. Then we're just gonna get started. Yeah, guys. So I just want to take you through the basics, okay? So that you guys have a better understanding of trading, right? And what it is that we do, and our trading system, you know, all these wonderful things, okay? Okay, guys, we're gonna get started just now. We're gonna get started just now. Doom, 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 doom. Okay, we're gonna get started in 30 seconds. Okay, my internet speed is just a little bit slow, guys. So hopefully that doesn't interfere with what we're doing. Okay. All right. I think we should just get started, guys. For those guys who catch up late, I think you can just watch this live stream again. You know, it's it's gonna be on my live. It's gonna be on my video list. Okay. So let's get started, guys. So let's say now this is you right there. Okay. And you want to trade the FX market. So I'm just going to say the FX market right there, okay? Right? So in order for you to trade the FX market, okay, you need to have a broker, okay? You need to have a broker, right? I know a lot of people, I got a lot of questions about this, right? You need to have a broker, okay? So before you can actually buy and sell currencies on the Forex market, you need to have a broker, which is what is going to allow you to trade the market. Okay, so that's the first thing that you'll do. You will go and open an account with the broker so that you can trade Forex. Okay, that's step number one, right? So before we move on, through the broker, guys, that's where you're going to, yeah, I think let's just talk about this in detail, right? Through the broker, you're going to need to open up a trading account. And then there's some platforms that you guys need to be aware of. There's MT4, right? There's MT4 and there's MT5, okay? All right? So most traders are using MT4, okay? But MT5 is also good as well, right? So you can choose which one you want, MT4 and MT5. I like trading on MT4 because that's my goat You know, that's my GOAT trading platform. So the idea is when you open up your account with a broker, okay, then you're going to execute your trades using the trading platform MetaTrader 4 and MetaTrader 5. Okay, very, very important. You guys need to understand that, right? So now, let's take it a step back a little bit. Let me just rub out everything. Rub, 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 rub. Okay, let's just do it this way. Okay, right. So now, to get started, guys, to get started with trading, that's you right there again. To get started with trading, what do you need? Okay, the first thing that you're gonna need is the broker, like I've just mentioned, because you won't be able to execute trades without a broker. Okay, so if you're looking for a broker, a forex broker, you can just Google it, search it online. You know, there's several brokers out there that you can register with. Usually, what they need when you make an account, you need to have your identity documents and then your proof of residence, and then just follow the steps to open a trading account. Right? You can either open a MT4 or MT5. Right? Okay, don't forget that MT4 or MT5. So, but if you're trading with our systems, you need to open up MetaTrader 4. Okay, now once you have a broker, guys, you know, I would recommend that you learn the basics, right? You learn the basic terminology regarding trading. Get a mentor, get someone to help you, or learn from the internet, pay somebody, do whatever it is that you need to do to learn the basics, because it's very, very important. A lot of people, when they start trading, they rush to funding accounts, but they don't have the basic knowledge. So it's very important for you guys to learn the basics, understand what trading is, understand what it means to buy, what it means to sell, understand or be more familiar with the terminology, take profit, stop loss, trailing stop, what is it, pending order, all this stuff that has to do with trading. Just make sure that you are aware and you are familiar with those terms, okay? Because it will really, really help you. Also, things like price action, support and resistance, trend lines. You see, there's a lot of things that you need to learn. So don't neglect the learning process, okay? Right? So you need a broker, you need to learn the basics, and then, you know, once you understand the basics, you need to have a strategy, okay? A strategy, right? A strategy. Okay, so guys, a strategy, when we're talking about a strategy, we're talking about the method that you will be utilizing to find opportunities in the markets. Okay, so that's your strategy. Okay, so you need to have a strategy. So, very important, guys, you need the broker. The broker is the company that you'll be executing your trades from. Okay, and then you'll be executing your trades through MetaTrader 4 or MetaTrader 5. Okay, you need to learn the basics, understand the basics of this industry and how it works. You know, get acquainted with it. Don't be somebody who doesn't know anything. Okay, give yourself a chance to learn, give yourself a chance to grow. Okay, it's very, very important. Again, now the strategy is also important because this is what's going to help you to determine which direction a market will go. All right. So, moving on, okay? We're still moving slowly. We're gonna fly soon, right? Now, when you're dealing with the forex market, guys, okay, what you'll see is you'll see like a graph that's moving something like this, going up and down, up and down, up and down. Okay, so basically, what this is just showing you the performance of the price of whatever it is that you were looking at. Okay, it could be a currency, it could be a stock, it could be a cryptocurrency, it could be a commodity. Okay, so now how do we make money with this? Okay, so we make money by determining the correct direction of the market, right? We make money if we can determine the next direction that the market will make. Okay? So now, The market can either go up, right, or it can either go down. Okay. Now here's the distinction. Okay. So when we are using our trading strategy, we want to determine if we want to open up a buy trade, and then we're using our strategy to determine if we want to open up a sell trade. Okay. So the way you make money in a buy trade is that if you open up your buy trade at a certain level and the market goes up, right, you start accumulating profit. Okay. But then if you open up the buy trade and the market now doesn't go up and it goes in the opposite direction, okay, that's when you're going to start losing some money. Okay. Same thing for when the market is selling or is going down. When the market is going down, right, you open up a sell trade, okay, and then if the market goes down, then you're going to start making profit. Okay. But then if the market doesn't go down after you open up the sell trade and it goes in the opposite direction, that's when now you start losing money. Okay. So that's basically how it works, guys. Okay. So you need to understand that's very basic. Okay. Another thing, guys, is I know for a lot of people this might be boring, but guys, this is what we are exposed to. Okay. So um, this is what it is. So the market, when it's moving, guys, it's got three states. Okay. There's three ways that the market can move. It can move in an uptrend. Okay, let's make this into a color. I'm just going to try and move as quickly as I can, guys. Okay, but during the week we'll zoom in on these topics that I'm talking about, and then we're just going to spend more time on it. But now I'm just trying to speed through it because we've got about 16 minutes left. Okay. So anyways, the market can either move up like this, we call that an uptrend, and then the market can move down like this, make consistent lower points, we call that a downtrend, and then the market now also has a third stage where it's moving sideways, right? It's not making progressive higher points or progressive lower points, and this is called the sideways market or consolidating market. Okay. So as a general rule, guys, in an uptrend, we're only looking for buy trades because the uptrend is basically um, the market pushing higher. Okay. So in a buy trade, we make money when the market is rising. Okay. And then for a downtrend, we open up a sell trade because as the market drops, we make a a profit, okay? Because we want the market to drop in a sell trade. So in a downtrend, we're looking for sells, and then here's the interesting part: in a sideways market, it's a ranging market. You want to buy at the bottom, and then you want to sell at the top of the range because the market is moving in between two levels just like that. Okay. And then you want to trade the breakouts when they occur as well. Okay. So it's very important, guys, although this is very basic, it's very important for you to understand that this is these are the three states of the markets or the three conditions that you'll see in the markets because you'll be confronted with these situations when you are using your trading strategy. So if you get a sell trade in an uptrend, right, then obviously you would approach that situation with a little bit more caution. Okay. And then if you want to approach the market in a sell trade, right? I mean, in a downtrend, but then you want to buy in a downtrend. Obviously, now because of the knowledge that you have, you will approach that market, with a bit more caution as well, because you don't want to trade against the trend, because you want to follow the direction of the market, right? Hopefully, we understand, guys. Okay, right? So let's just make it plain again for those guys who really don't understand. Okay, so when the market is going up, right, we are interested in opening up a buy trade. Okay, so now after we open up the buy trade, if the market goes up, we make money. Okay, But then if the market goes down, after we open a buy trade, we lose money. You understand? That's how it works. And then um, when the market is going down, okay, I'm just repeating this, guys, so that you guys can understand. Okay, when the market is going down, you open up a sell trade. Okay, you open up a sell trade. Okay, and then after you open up the sell trade, if the market does continue to go down, okay, then you are going to be making a profit. But then if the market now doesn't go down and it goes up, then that's where you're going to start losing money. Okay, so it's very, very important to be aware of the different um, states of the market, the uptrend, the downtrend, the sideways trend. Okay. And before now we go to our MetaTrader 4 platform, another thing to understand as well is that the Forex market has three main trading sessions, okay? And these three trading sessions work at different times of the day. So you've got the New York session, you've got the London session, and then you've got the Tokyo session, of which is also referred to as the Asian session. Okay, so why is this important? You need to understand, guys, that at these different trading sessions, okay, there are currencies that are most likely to be active because those stock exchanges are occurring at that time. Okay, so you need to be able to identify the correct currency according to the trading session. Okay, so you want to trade the correct trading session and you want to trade the correct currency of that trading session. Okay, so like let's say for instance now you want to trade in the Tokyo session. Okay, then you'd look for markets or currencies that are active in the Tokyo session and not currencies that are active in the New York session. Okay, makes sense. So anyways, just research that a bit. We'll talk about it in much more detail as the week progresses. Okay. So those are some of the basics. So now let's just quickly go ahead and go to MetaTrader and let's see what MetaTrader has for us, okay? So now, since we're on MetaTrader, guys, let's just recap on what we've learned, okay? We know that the market has three states, okay? It's got an uptrend, it's got a downtrend, and then it's got a sideways trend, okay? So then each time we are trading, guys, we want to determine the next move of the market, right? Okay? So if we think the market is going to go up, we open up a buy trade. If we think that the market is going to go down, we open up a sell trade. Very easy, right? Very, very easy. Very, very easy, okay? So now I'm sure you're asking yourself, like, so how do we know when the market is going to be active? Okay, so you ask yourself, like, how do we know which direction the market will take? Okay, you use your trading strategy to determine that, right? So now, um, look at this, guys. Okay, before we even look at our trading strategy, and I'm gonna go very quickly with the trading strategy. Okay. So I just want you guys to have a look at the bottom of the screen here. There's some words that you guys need to understand, okay? If you open up your platform, okay? If you open up your platform, you'll see some words there, okay? You'll see it written sometimes balance, equity, and free margin, okay? So your balance is how much is in your trading account, okay? And then your equity is your balance, okay, minus or plus the open trades, right? So let's just say, for instance, if you had a balance of $500, for instance, okay, your equity is the amount of money that will be in the account after all the trades are closed, after all the running trades are closed at that moment. So let's say, for instance, if you have trades running and they're making $100, okay, let's say you have $100 profit, so your equity would be $600, okay, because now if you close all your trades, that is your future balance, right? So it works even if your trades are in negative. Okay, so if your equity, for instance, is $300, okay, it means that that's how much is going to be in the account after you close all the trades. So meaning that you probably have a negative $200 uh, $200 lying running on your account. Okay, and then your free margin. Okay, your free margin, guys, these are the three. You just need to focus on these ones. These are the ones that are important. Okay, so you'll notice as you're opening trades, your free margin will keep decreasing and decreasing and decreasing. Okay, so your free margin is the amount of funds available in your account that you can open up new trades with. Okay, so let's say, for example, you have maybe some 5 trades running, and then let's say your equity is whatever amount it is, and then let's say your free margin now is maybe $100, okay, or 100. So that means that you only have $100 available to open up additional trades. Okay, so free margin is speaking about your future running trades. Okay, how much money is available for you to open up new trades, right? Very, very simple. Okay. So keep an eye on these things. But I think when the market is open, then we will have a better understanding practically of what's going on. Okay. So, anyways, let's quickly go through our trading strategy, guys. I'm running out of time. I'm running out of time right now. So let's just quickly find a few examples that we can do. I'm going to do one sell example and one buy example. Okay. So here's a quick sell example. Let me see if I cascade, maybe a clearer one. All right. Okay, guys. So I just opened up this random chart on a daily chart just so that I can show you how the system works. Okay. So for sell trade, guys, right, there's a few things that we need to see. Okay. The first thing that I want you guys to notice is that white line. That white line is the 100-period moving average. Okay. So for us to even consider a market to be a buy trade, the price has to be above this 100 moving average. Okay. And then for us to consider a sell trade, the price needs to be underneath this 100 moving average. Okay. So now if you're looking at the price, you can see that the price is under the 100 moving average, which suggests to us that we need to be looking for sell trades. Okay. That's the first thing that we need to determine when we're using our trading strategy. The second thing is we need to look at this bottom window right here, this bottom window down here. Like if you look, take your eyes down to all these percentages down here. Okay, over here, guys, if we can determine that the market is underneath the 100-period moving average, we want to see this volatility meter to be at 70 or above. Okay, so if the volatility meter is at 70 or above, then that validates the trading levels that the system gives us. Okay, so what do I mean by the trading levels? So as you guys can see, you can see that something's happening on the chart, or that there's something on the chart. You can see there's sell, there's stop loss, there's take profit 1, take profit 2, there's even take profit 3. It's just that I need to zoom out a bit. It's actually okay. Let me just zoom in. Okay, it's actually pretty far away. So anyways, there's 3 take profits. Okay, so now if we can determine those two factors, that the price is underneath the 100 moving average and then the volatility meter is at 70% or above, then now that validates our trading levels. Okay, so once we see that, we can use our trading levels. You guys can see we get a sell entry, we get a stop loss level, we get take profit levels. Okay, just like that, just like that, just like that, just like that. So that's how you would interpret a sell signal. Okay, now a buy signal, let's just quickly look which market is buying right now. I just want to quickly, I'm trying to find something real quick. Okay, just hold on, guys. All right. Okay, no, this one is not a good example. This one is not a good example. All right, I need to find another example ASAP. Okay, so I'm just gonna use this example here. Here's another random market, right? So, okay, now for a buy trade, guys, for a buy trade, the market now or the price, it has to be above the 100 period moving average, okay? And then if the price is above the 100 period moving average, that suggests to us that this is a market that's going to go up, okay? So that's the first thing that we need to see. And then the second thing is we look at this volatility meter at the bottom. If it's at 70 and above, then that validates our trading levels, okay? And then now, if we look at our trading levels, we can see that we've got a buy entry over there. We've got our stop loss, take profit 1, 2, and 3. Okay. And then that is how we would get our buy trades. Okay. You saw how we got our sell trades. You saw how we got our buy trades. Now, how do we make this to be more efficient? Okay. So let me just peep if we've got any questions. Okay, guys, if you have any questions, just type them in the chats. I'm looking at the chats right now. Okay. So now going back, how do we make this system or this trading strategy to be effective? Okay. So the first thing that we need to do, guys, we need to establish a trading plan. Okay. Now, what does our trading plan entail? Our trading plan needs to guide us, guys, as to how do we use our trading strategy or our trading system. Okay. So the first thing that I would do, guys, if I was wanting to better my trading strategy is I would first identify which trading session I would like to trade. Okay. And then for me, that would be the New York session, right? That's the first step. The second step would be now, okay, since I want to trade, I know which trading session that I want to trade. Okay, which currencies are active in the New York session? All right. We haven't even started analyzing it. So now, once we've established the trading session that we want to trade and which currency is active in that trading session, then now we can proceed to starting to analyze and looking for trades. Okay, so one way would be to look out for those particular trading sessions, and then if we get the correct trading sessions, we trade the correct currency that is active in that trading session. Okay, now, once we've determined all of that, guys, okay, we need to execute our trades. Once we find our trades or our signals, we then need to execute, okay? And then when you're executing, guys, there's something called a lot size, right? The lot size determines how much money is your profits going to be multiplied, or how much money is your stop loss going to be multiplied. So the higher the lot size is then implying that you're going to get higher profits, but also it's increasing your risk as well. So you need to have a good judgment or good determinations of the lot size. We'll talk about how to calculate the lot size and how to make it easier on our next trading session or trading class. And then also, guys, we need to do something called risk management. Okay, so we're talking about making our strategy to be efficient. Okay, so if we make these little tweaks, then that gives us an edge and puts us on the right path. Okay, so anyways, guys, that's all the time that I have right now. I'm just gonna, if you guys have any questions, if you have any questions, guys, just leave them in the comments of this video. When we do our next training session, right, I'll start by answering the questions that you guys have asked in the telegram, I mean in the chats. Okay, but anyways, guys, thank you so much for watching the video. I'll see you guys on the next one. Take care. I'll see you guys. Cheers.